you all for being here. I want to take the time to thank you all for jumping in early on the second day. I know the second day of a conference can sometimes be a little bit more difficult and harder to get to, especially with whatever you've been doing the day before. So thank you for making the effort for coming in. It is fantastic to see so many of you. We are going to be talking this morning about building a stronger financial system. I'm joined by some fantastic people today on the stage, and I'm going to give them all an opportunity to introduce themselves. I will lead by this and introduce myself. My name's Khaled. I'm the Managing Associate of Gresham International. I'm a lawyer, but please don't hold that against me. I'm also an author. I write, I speak, and it's a privilege to be here in the UAE at the moment, working with so many distinguished individuals on the ecosystem. I'll hand it down to the panelists. I'll let you work your way down, and please introduce yourselves.
Thank you, Cal. It's wonderful to be here, a great honor, and I would like to thank the DIFC and the DFSA and MENA FinTech Association for the opportunity to be here today. I'm Sarah Hammer. I'm Executive Director at the Wharton School. I lead strategic initiatives in that role, including our Emerging Technology Accelerator, which is focused on blockchain and artificial intelligence, and our Future Finance Initiative. And I'm a professor at Penn Law School, where I teach alternative investments and financial regulation. Last year, I was on a short-term leave of absence to serve as Secretary of Banking and Securities in Pennsylvania. I led the department to oversee 290,000 financial entities and $3.5 trillion in assets under management during the banking crisis. Prior to Wharton, I was at U.S. Treasury and in trading and portfolio management. And I'm really looking forward to the conversation today and thank my distinguished colleagues as well.
Thank you. I would like to echo the gratitude for being here. It's been a wonderful experience so far. So thank you to all of our hosts for a very interesting event and a lot of insight into the fintech space and really all of the exciting things happening here in Dubai and in the region more broadly. My name is Mike Sobel. I'm one of the CEOs of a company called Trumid. We are based primarily in the United States. We're an electronic trading platform for fixed income securities. So think really kind of an exchange for bonds, predominantly corporate bonds. We've extended into sovereign and quasi-sovereign debt as well. So for us, it really is about leveraging technology to capture network effect benefits. Commerce on a platform, whether it's a financial product or otherwise, obviously is really an exciting opportunity to leverage technology to drive efficiencies and access. Data automation with the sort of artificial intelligence as a delicate bridge between those things is a very important part of what we do. So really a lot of the content here over the last several days is very relevant and quite enjoyable. So thanks again for having me, and thanks to everyone else on the panel.
Great. Great to be here today. My name is Khaled Albasias. I'm a Director of the Financial Sector Development at the Saudi Central Bank. And my role is really to develop the financial sector. It's self-explanatory, I guess, my job, to ensure that we really execute in our Vision 2030, preparing that sector for the next wave, whether it's banks or fintechs or payments. And I've been doing this job for 2.5 years now. Thank you.
My name is Siobhan Byron. I'm the EVP for Universal Banking at Finastra. And Finastra is a global software company specializing in financial services. I would like to thank everyone for joining us here today, as well as thank, obviously, the organizers for inviting me. It's a pleasure to be here.
Fantastic. What an outstanding panel we have. I'm really looking forward to this. So let's begin with something I think we should all discuss. When we look at building stronger financial systems, in order to do that, we have to understand what some of the weaknesses are in the current financial systems. I appreciate we're all going to be looking at this from a very different lens, and that is something we spoke about a moment ago. So in your perspective, perhaps you could pick the top one or two things that the current weaknesses in the financial systems and financial services industry at the moment? That would be fantastic. Sarah, I'm going to lead with you, if I may, and then we'll work our way down.
Thank you. Well, as I mentioned, I am a former regulator, so that's one perspective that I bring, but also as a former trader and portfolio manager, now focused on technology. And I would easily note that one weakness of our system is the regulatory fragmentation in the United States. We, of course, have a very robust innovation center in the United States, but we also have 6 federal financial regulatory agencies, in addition to U.S. Treasury, and we have 50 states that also regulate. So, for example, in the banking crisis of last year, which involved Silicon Valley Bank, as well as Signature Bank and First Republic, those were all state-based regulated entities. And I was in a regulatory and supervisory role at that time. The system of dual banking is part of who we are in the United States, but coordination is key. And I think for innovation to thrive and for the financial system to be strong, we need clear regulatory frameworks and we need coordination amongst our agencies. I do believe in the potential for financial technology to improve and strengthen our financial system, assuming there's clear regulation. So, for example, the use of blockchain technology to clear and settle payments nearly instantly is one of the reasons I became interested in the technology, and the potential for artificial intelligence, for example, to improve many operational aspects of the financial system. So I'm advocating for regulatory clarity and coordination, and hopeful that we have the opportunity to learn from all of you as well.
I love that. Fantastic. Thank you. Michael.
You know, I think in through the lens that of where Trumid operates, and I think it's interesting how much this sort of resonates hearing from tech space over the last several days. Legacy infrastructure is a challenge as we try to push things forward, and for institutional fixed income trading, which is the world we live in, that exists on kind of whether it's banks or asset managers' legacy systems, the connectivity, the plumbing is kind of decades old, and while there is, I think, material enthusiasm from the participants themselves, and this is not something I would have said a decade ago or even 5 years ago, but there is real enthusiasm about adopting new workflows, and whether that's for data capture or efficiencies, kind of operational improvements in their business model. There's real enthusiasm around it, but the kind of legacy infrastructure and architecture is definitely an impediment to that. And in hearing some of my peers at this week talk about their own kind of industries in the path forward, so things like payment and various kind of retail segments, similarly very different dynamic, different infrastructure architecture, different sort of old habits that are kind of dying hard in one way or the other. But I think that is a fundamental governor of progress in the space that we're in. And I think for a region such as the one that we're in, where there is an opportunity to do kind of build from the ground up in a lot of instances, that is a really exciting opportunity because you don't have, we're not dealing with the same amount of, maybe kind of scar tissue as we are in, certainly in like the U.S. financial system, for example.
Yeah, great points. Thank you, Michael. Excellency?
Sure. I think in the recent memories, when we look at the 2006 crisis and recently COVID-19 crisis, central banks are really now, I guess, more dynamics when it comes to trying to identify these risks when it comes to the financial sector, liquidity risks. It's quite different and I guess quite dynamics. So financial institutions need to monitor, identify, and look at their own risks, and central banks really need to be more dynamic when it comes identifying these risks, emerging as well as cybersecurity risks. Different really types of risks are emerging in recent memories. So these events are really important to central banks, where they identify not just liquidity risks and interest rate risks, and all of these type of risks are really changing and quite dynamic in the last few years, and regulators need to be really aware of all of these type of risks, all of this emergence of type of risks, and trying to identify the policies that really addresses these risks and work with the sector in tandem to ensure that risks is really being addressed, monitored, and flagged when it's important. Thank you.
So I think tying a few things together, I think for me, the pace of change, which, if you look at it, brings in regulatory, it brings in the underlying infrastructure from a technology perspective, it brings all of these pieces together, but also it's about the consumer and what they're driving, wanting personalized experiences, moving faster, quicker, forcing us to be able to keep up with that pace. But I think there's a second part to that, which is then, if we look at that demand and what it's driving, we also need to be conscious of how are we supporting the overall environment? Like, if we think about it from an inclusivity perspective, there is a significant portion of the world that is unbanked and underbanked. And how do we make sure that as we move with the pace of change, that we're allowing and enabling that through technology and other means?
Yeah, great points, fantastic points. And what's really interesting is I actually like seeing this from very different viewpoints and very different focal lenses, which is something we were discussing upstairs, but now we're actually talking. It's very interesting to see that coming to life. One of the things that I am actually genuinely very curious about from this panel is when we talk about stronger financial systems, there's something that we look at and we're all very cognizant of, and that's indicators. What are indicators of strong financial systems and what are indicators of weaker financial systems? Those are easy. But when we think of it in the context of what are indicators about when there's problems coming, one of the things we're very cognizant of, and Your Excellency mentioned the key word a moment ago, that's interest, inflation. There used to be a saying years ago, work until you find Dubai cheap. Well, for those of you who live outside of Dubai, everywhere is now very expensive, and that is a very clear indicator. So perhaps you could talk a little bit about some of the indicators that you are seeing, where you are positioned in the industry, that maybe this is all made up, maybe we are still very resilient and very strong, or maybe there's a shift coming in the economic market and what you see and how you feel about that. I'm actually going to start right down the end, and then I'm going to let us work our way up.
Okay.
All right, so I think some of the things we're seeing from our customers and the market is really in terms of, we just talked about pace of change in some of the things, right? And it really drives, spend, it drives, how they're reacting to the market and what's happening there. Everybody is conscious of the changes and the challenges that have been going on last year in the financial sector. Interest rates, spending, obviously looking at consumers, what's going to happen there. It is top of mind. But we also see from a technology perspective that at times like this can be a great opportunity for banks and financial institutions to really set the foundation for their future, right? To take the opportunity to be prepared for sort of that next step of the journey. And that's quite honestly what we're seeing is it is a balance, but I think there's a feeling that you can't step off the path. You can't let yourself fall behind. It's important that you are thinking about how you're going to service that customer, because again, that consumer and the journey that they're on is changing so quickly. We see it here in Dubai as well, when you even think about the apps that are available and how you can purchase, right? Just looking at, one of my colleagues arrived here the other night, was looking to get something, basically told, oh, there's an app for that, go on and do it, but a couple of hours later, everything's at the hotel room. The world in which we're living and the impact that has is so significant.
Absolutely, yeah. And I think technology is giving us a lot more access to a lot more information very quickly as well.
It is.
Your Excellency, maybe you'd like to expand on that.
Yeah, just a few points. I think central banks are really in the business of risk management. So, and for a resilient financial system, you need really to have financial institutions that really have the right credentials when it comes to capital ratios, and to ensure that they're sustainable, whatever tiers of capital is really sufficient enough to support that financial sector. That's on the banking. On fintechs and small players, these are really, as I said, different risks emerge when it comes to especially cybersecurity, on the conduct side, KYC, know your customers, and other parts of regulations that they would need to comply with. So really different parts of the financial sector would require different type of credentials and conducts that for large financial institutions, ensuring that their liquidity, their ratios, their books are really at the optimal phase to comply with whatever potential risks that could emerge. We've seen COVID-19, really no one could predict that, and when it came, it was important that the financial sector was prepared, and to prepare the financial sector, you look at their conduct part and you look at their prudential part. Prudential meaning that they have enough capital, sufficient capital to observe any risks that could emerge from any event that potentially have negative implications on the financial sector. Thank you.
You know, Siobhan, you mentioned access earlier as a kind of barometer of health, or certainly an important goal of financial technology should and does meaningfully broaden access to the financial system. And typically, I think we would think of that in terms of parts of the world that historically have not necessarily had access to the same sort of robust financial systems. But, you know, I think as a diagnostic around maybe, you know, Khaled referring maybe a little bit more sort of cyclical type health, I think the openness, the access to capital markets is tremendously important. Now, I operate in the corporate credit space, and, you know, for example, like the frankly global corporate credit markets our credit markets are pretty open at the moment, and I think we have, you know, worked through some things like our banking crisis last year that at other times in the past could have, and certainly like regulatory action and a number of smart decisions were made, but I think the overall market's ability to work through that and isolate it and not have it mean that credit became unavailable to large sectors of the market and the economy is, you know, one, indicative of a crisis that was well handled, or at least handled, but two, indicative of a generally healthy market. So whether that's financial institutions or certainly like sovereign borrowers, when you know, usually things go from bad to really bad when access gets cut off. So you know, from my perspective, the, you know, openness of kind of debt capital markets broadly speaking, and the ability to borrow money, certainly in the world that I live in, but I think more generally speaking, leads me to kind of conclude that we're in a decent spot, sort of globally from a credit availability perspective.
Sarah.
Yeah, well, I thank my colleagues for their comments, and I'd love to touch on cybersecurity at the end as well. I have the perspective of a U.S. former banking regulator, and I believe that we really in the U.S. think about two main aspects of a healthy financial system. There's the banking system, and then there's capital markets as well. So both need to be healthy and functioning, and how do we determine that? I believe that an indicator of a strong financial system is a robust banking ecosystem. And what I mean by that is that we have not just large banks, but also small banks and community banks. And in the United States, the reason small banks are important is because they provide credit where larger banks are not willing to or are not able to. So a local banker in the United States will know the borrower personally and be willing to extend a loan where they would not get a loan otherwise from a large bank, because they know this person, they know they'll pay it back, they can work with them individually. I would say in the United States, we have seen a significant contraction in both the number of banks and the number of community banks. And that concerns me. I think that also, obviously, not having any bank failures is an indicator of a strong financial system. And in a rising interest rate environment, that's something that continues to be a challenge. On the capital markets side, we have robust and healthy capital markets providers in the US, but our system is much different than it used to be. After 2010 and the great financial crisis, we saw a lot of money flow from banks into capital markets, into private equity, for example, and it remains to be seen how that will proceed. The other thing I'll talk about briefly is innovation. So I believe that innovation is a strong indicator of whether a financial system is healthy. And again, in the US, we are strong innovators. We're known for our entrepreneurs and our founders, but we also have a very unclear regulatory framework around things like digital assets, for example, and artificial intelligence. And I would like to see us move forward on both of those counts so that entrepreneurs and founders have clarity to run their business. Businesses run on clarity, and that is how they can plan. The last thing I wanted to comment is the point that was made earlier twice about cybersecurity. I completely agree that cybersecurity is a great threat to our financial system. And we have a number of rules and regulations and regulatory bodies in the US that are involved in different aspects of cybersecurity. One thing that we do need to be very aware of is artificial intelligence and the propensity for it to actually make cyber attacks more likely, because artificial intelligence and generative AI in particular can better identify points of vulnerability in our system. And so we need to meet that challenge in various ways as regulators and encourage technological innovation that can help us address the many issues that are coming in cybersecurity. For example, AI can help us create deep fakes. There's a greater propensity for fraud in the financial system, both large scale and at the smaller level. And those are things that we really need to have a cohesive framework around and coordinate our vast regulatory framework in the US.
Absolutely. And you jumped over my next question just a little bit there, which is absolutely fine. So we've spoken a little bit about so far, problems that we're seeing and indicators that perhaps we can align with. If we move into a technology vein now, let's talk about the future and things that change that's coming and things that we can use. What's being deployed at the moment from a technological perspective to actually help with some of those things we just discussed, those issues that we faced and the indicators that we can see, what's being developed and what's being deployed right now to help overcome some of those? I'm not going to start with you, Professor Sarah, just because you rocked the question slightly already. Your Excellency, I'm going to start with you and then we'll move around a little.
Sure. So maybe I don't want to sound a very prudent central banker. So on the innovation side, which my colleague Sarah mentioned, it's really, really important to the financial sector. And in Saudi Arabia, 2 years ago, we have announced our national fintech strategy, which aspirations to really reach 525 fintechs by 2030. And that's really an important metrics because innovation really comes in a different type and shapes. Payments have different type of innovations when it comes to financial sectors. We've seen a lot of innovations come from that space. Then moved to finance and lending, trending, buy now, pay later, microfinance, and really different types of activities in that space too. And in Saudi Arabia, we've started in 2018 our regulatory sandbox, where for the financial sector is a sensitive sector. We want to ensure that innovation is really contained within our regulatory boundaries, that you explore and ensure whatever failures happens within that boundaries. And that's when we started the journey. And I think today we're around 200 plus fintechs. In really a very short span of time, we're able to really bootstraps, do a lot of streams and projects and activities to ensure that sector really is up and running. And it's really quite an interesting time, I would say, to be in the fintech space, especially in Saudi, with the support of the Saudi government and with the Saudi Central Bank as a custodian for that fintech strategy. So great times to be in the fintech space, I would say.
Absolutely. Michael, perhaps you'd...
Yeah, you know, an interesting area in the business that I'm in, and broadly speaking, is just the theme of automation and the automation of manual processes, or manual processes in the financial industry certainly gum up the works and slow things down. So you think about the process of getting a mortgage in the U.S., and many of those, I would say, wrinkles have been kind of ironed out over time, and not to say that that's the easiest thing to do in the world, but by automating some of those many steps along the way, I think those are the sort of things that allow financial markets to operate more seamlessly and efficiently. Now, certainly all things automation are applications of machine learning and AI and all of these things that we're rightly very excited about, but it certainly has to proceed. We proceed cautiously. There's decision making that I think we need to be prudent in how quickly we hand that over, and understand. Look, there's a whether or not you issue credit to a potential borrower, or whether or not you buy or sell a certain security, are, I think we can objectively say those are more consequential decisions than like what video is going to come up next on your sort of streaming app. So I'm certain that we will look back in probably 5 years and say, yeah, that seemed like an antiquated way of thinking about it. Of course, the machines and the algos can figure out how to do this every bit as well as humans, and a whole lot faster. So there will be lots of positive benefits, but certainly in the world that I live in, I think our sector, broadly speaking, we need to be thoughtful as to how quickly we kind of hand over the keys, so to speak.
Okay, interesting. Sure?
Sure. For us, finance is open. And from a technology perspective, I think there are a few things we're seeing. We look at it from the perspective of the movement to cloud, for instance, right, and more modern technology. We look at it at being open via APIs. We look at the ecosystem, the connectivity again. We look at the fact that microservices, people want to be able to consume smaller, create that journey that they want. And so all of those trends obviously tie into, security remains top of mind, as my colleagues have said here. But I think what we are really seeing is it's really about figuring out that journey, again, at a pace which works for the customer. But really it's how do they move from legacy and be able to consume and transform their business in a way that meets the security, the regulatory requirements, and the business needs that they have to accomplish. And so we see this environment from an ecosystem, the partnerships becoming critical, the leveraging the fintech. None of us can create everything and be specialists in all areas. So I think that ecosystem becomes more and more important, and it's having that open, modern technology that underpins and allows you to actually transform your business and be able to future-proof it, I would say, that becomes paramount to success as we move forward.
Yeah, absolutely. And last but not least, Professor.
Thank you, Cal. It's a really important question. I have the privilege at Wharton of leading our financial technology accelerator. It's called Wharton Cypher Accelerator, and I have a number of amazing students who work with me. And we most recently launched a cohort of AI and blockchain-based companies with a number of incredible leaders joining us for that day and for the presentations. So I have seen great innovation from fintechs that I believe will help improve the financial system. To give you an example, we worked with a company this year that is creating software to help onboard companies to generative AI. I can't go into too much detail about it, but the engineers are incredible. We've worked with other companies that are creating tokenization of real assets. That was very interesting, and the company was actually there very early in the phase. And we've worked with a number of amazing companies that are using technology for things like creating efficient provision of energy. So, for example, in the US, our energy consumption data is protected by privacy laws. This company would provide non-fungible tokens, or digital assets, for individuals to make their data available. They would own the data, they would make it available. And this company would use AI, in fact, once the data is provided, to determine how energy should be allocated in a large building, for example. And it's a really unique model, especially after the pandemic, where many folks went to work at home. So I think there's great potential for fintechs to help us improve the financial system. AI, for example, is being used by banks to help make more efficient capital and liquidity, and that's very important under new banking regulations and forthcoming policy debates around things like Basel III Endgame in the US. And they're also using it for customer interfaces to make customer interactions more efficient. Now, there's, of course, a lot of work to be done around that, and in fact, what was mentioned earlier about AI and going into it in a slow manner, I think really what we think about is what is your governance policy? What provisions do you have in place to use generative AI? Because it is a transformative technology. Do you have good data protection, for example? What kind of model transparency are you able to make available to those who would be interested and to regulators? And on the banking side, there's something known as explainability, which is very integral to the forthcoming regulations that will be developed around AI and its uses in banks. But all of us use this technology in different ways, and we should, I believe, create a taxonomy for how those governance mechanisms should be applied and in what context are they appropriate. So many international bodies and standard setters and countries, in fact, working on AI and AI governance. And I look forward to continuing the discussion about it.
Oh, very exciting. Fantastic. Well, we've got 2 minutes left. You guys can't see the time, but it gets very ominous and red when we start getting short on time. But I'm keen to use our time fully. Just give a 30-second snippet, and this is something I love to finish every panel with, of what you are most excited about in the future. Something that you personally are very excited about, something that's coming down the pipeline, and something that's going to help build a stronger financial system. Professor Sarah, I'm actually going to start with you because I know that you're going to have one ready to roll. So we'll start with you and then we'll work our way down.
Thank you, Cal. I am excited about innovation in the financial technology space. I believe this is where solutions will come to our financial system, both for large institutions and for small. I originally became interested in financial technology as a trader because the clearing and settlement process in the US, as many of you may know, is a bit antiquated, and there's a high propensity for tokenization to enable us to clear and settle trades faster and more efficiently and on a safer basis. Likewise, in artificial intelligence, I'm excited about the prospect for innovators to identify ways for the technology to make our compliance systems more efficient, to work better with other institutions, and to provide for customers. Of course, there's a lot of work to be done around governance and a lot of places that we need to be cautious, but I believe in the power of innovation to make our financial system stronger.
Awesome. Michael?
We're at a point in our business where we're really seeing network effects explode. So personally, I'm excited about that, but more broadly speaking, that kind of power of getting lots of institutions, individuals onto into a marketplace or a network or a platform and giving them tools to engage. We are privileged to be experiencing that firsthand, and I think that when we think about the financial sector more broadly speaking, and the ability of technology to connect, again, individuals and institutions and give them the tools to do whatever it is that they've come to that platform to do, it's as powerful as advertised. So I think that will be a big benefit for the sector, broadly speaking, in the years to come.
Excellent.
I'm quite excited for the innovation in the financial sector, and I think the use of technologies like artificial intelligence, and that remains to be seen how that will impact the financial sector, hopefully with some good use cases, as well as tokenizations of assets and the use of blockchain. That really hasn't started, so hopefully that will be used in the mainstream in the financial sector. Thank you.
And I would say I'm excited about how the financial sector and financial technology can unlock the power of people, businesses, and communities globally.
Very cool. If anybody's interested, I'm very excited about regulation. We're actually in a regulation race globally now to regulate a lot of the upcoming technologies. There's some very cool things happening, so I'm excited to see where that takes us. But I'd like to thank all of our panelists for being here. This was fantastic. I've thoroughly enjoyed this. Thank you for being here. Thank you for the event organizers. Thank you for all of you for participating in this, and join me in giving a round of hand to our panelists.